Hello, hi, good afternoon. Hi, thank you for joining us in this webinar. We will have our partners from ZICO. So we have Wimin and Jonathan with us today. Okay, so maybe I just take through a little bit on the digital ethos in Labuan. So in Labuan itself, our ethos is that digital is actually a business processes. We don't have a specific license for a digital or these virtual asset service providers as other jurisdictions have. We're really relying on the existing license that we have, and then really the technology will then support the business functions and collapsing the business on a DLT or technology. Let us just run for the first poll questions. So do you think the digital community will need regulatory recognitions? Okay, thank you. So we will have 3 poll questions today in total, and the result will be shown later on. So let us move on to Wimin, the directors of ZICO Trust Labuan. She will talk about the regulatory recognition in Malaysia and Labuan IBFC today. Thank you, Wimin.
Thank you, Serene. Good afternoon, everyone. Very happy to be joining this session. I have with my partner, Jonathan Lim, who will speak after me, to give everyone a quick glance on what the regulatory recognition in Malaysia and Labuan is for digital assets, current status perspective. Next slide, please. So I will take you through the current laws and regulations in Malaysia, and then I'll come down to Labuan. As you know, Labuan is a federal territory within Malaysia, so we're a country where we straddle between 2 sets of laws, what we call the onshore and the midshore laws. So in Malaysia, the digital assets arena is regulated and overseen and supervised by the Securities Commission Malaysia. And the main Securities Act we have here is the Capital Markets and Services Act. I will talk briefly through the laws that have come into place to make clear how this class of asset is treated now in Malaysia. Just walk you through quickly the current orders and the guidelines that the Securities Commission has come up with. And then I'll move down to the Labuan situation, which is what is presently available in Labuan and how the Labuan players are doing in terms of the laws. Next slide, please. Okay, so for Malaysia, the Securities Commission have in 15th of January 2019 come up with the Capital Markets and Services Prescription of Securities Order, which essentially makes clear that digital currency and digital tokens are securities if they fulfill certain characteristics. So this clarifies the situation in Malaysia, because before this, there were cautionary tales out there about what to do when players start to issue tokens and all that. So right now, the SC position is quite clear that they came up with definitions of what is considered a security if you were to issue a currency or token. This does not override the Bank Negara's policy on digital currencies not being recognized as money. So like many other countries, it is still not legal tender. So the position we have in Malaysia, probably similar to many countries, is when you do issue a token or a currency, the question that legal advisors and advisors will have to face is it a security or not a security? So if you move to the next slide, Waiman, we can see what is the definitions the SC has come up with in terms of what is security or not security, right? So this is the definition for what a digital currency is and what a digital token is. If you look at the digital currency, essentially, I put it out there, can read at your leisure after this. If you have a currency that is traded in a place or facility where offers to sell, purchase, or exchange are regularly made, where the owner expects a return, not issued by a government body, these characteristics will make it what we call a prescribed security. Now, when you come to the tokens, that list of characteristics will cause a digital token that you plan to issue to become a security. And if it is a security, if any of these are securities, then what happens is you fall within the Capital Markets and Services Act. Okay, next slide, please. Right, if you fall within the definition of security, then the SC has specific guidelines in terms of what to do if you were to issue a token. So in the SC guidelines on digital assets that came up just this year, early this year, there are very clear prescriptions and requirements on what to do when you issue a digital token. So these are the requirements that you have. The issuer must have paid up of 500,000, minimum 2 Malaysian resident directors. The directors and senior management must own 50% at least in the issuer on the date of the issue of the tokens, and they cannot sell more than half of their tokens after they have started the project. Now, what is important to note is that when you do an issue of a digital token under these guidelines, you must carry out the offer of the tokens through an IEO platform here and by no other means, right? So the way Malaysia onshore has done it is, if you want to issue a token that fulfills the definition of a security, then you must do it through a registered initial exchange offering. And you must, the usual white paper will be necessary, and you need to do certain publishing of annual reports and annual reports and all that. Waima, next slide, please. Okay, so when you do the issue of the token in Malaysia, then you need to have it done on a registered IEO platform. So these guidelines also then set out the requirements on who and what are the requirements in terms of setting up and registering yourself as an IEO operator. So the IEO registration requirements are that if you want to do that, it allows you to trade digital assets. You must have a minimum paid up of 5 million, qualified responsible person. And what is important to note here, probably another important point, is that they also set out the limit of the funds that the issuer can raise under this platform. So an issuer that chooses to issue tokens in Malaysia through the IEO can only raise funds of limited amounts up as set up there, which is multiple of 20 up to a ceiling of 100 million. That's on the limit of the funds being raised. Now, for the investor out there, how much are you able to invest in a digital token that's been issued properly by the IEO? So they have limits there for you. For sophisticated investors, no restriction on the investment amounts. For angel investors, and those are mid-range sophisticated investors, you are able to invest up to a maximum of 500,000 within a 12-month period. For retail investors, men on the street out there, you can invest for a maximum of up to just 2,000 ringgit per issuer with a total investment limit not exceeding 20,000 ringgit within the 12-month period. So these are the limits that set out on you if you were to do this, which the IEO operator will have to monitor. Next slide, please. There are probably just these two guidelines in terms of the issue of tokens and digital assets in Malaysia currently by the SC. So in addition to the order, we have the digital assets, which talks about the issue of the token. And the second one is the guidelines on recognized markets, which came up in 2015, but lately introduced a specific chapter on digital asset exchange. So this guidelines deals with various kinds of platforms for various things for recognized market operators, so which includes equity crowdfunding platform, P2P and all that. And in line with the digital assets guidelines, they then introduced a chapter dealing with digital asset exchanges, what we call DEX. So just very quickly, DEX operators are needed if you want to trade your tokens on the platform, right? So if you want to issue the token, you need to find an IEO, but if you want to trade it, that IEO operator must be a DEX operator as well. Okay, next slide, please. Right, that's the Malaysian environment for you. That's what we have currently in Malaysia for that. Now, on Labuan, what's the landscape like? So for Labuan, digital financial service providers are currently able to operate within the current framework of existing laws and regulations. There are no specific guidelines on digital financial services and all that. What's happened is players have been able to operate within existing laws, which is really the Labuan Financial Services and Securities Act and related guidelines. Now, those of you who are familiar with Labuan, this is the main omnibus act that we have that covers all sorts of financial services available in Labuan, which is banking, insurance, leasing, and now with the digital financial services, it permits that as well because of the various licenses that you can obtain under the act. The authority has come up with a circular in 2018 on innovative financial services, which says that they support the offer of IFS through IBFC. So digital current activities, robo-advisory activities, blockchains, distributed ledger, InsurTech, and all that is all recognized to be fine. Basically, if you're interested in doing an activity like this, you write into the FSA and then get specific approval and guidance on what kind of licenses and approvals you can get, right? Next slide, please. Okay, so what have players been using in running their business, digital financial business in Labuan? These are the licenses that you can use and which have been used by digital players. The money broking licenses are the ones that facilitate transactions between buyers and sellers in the money or foreign exchange markets. The credit token license is the one that you use when you issue a token, right? This is not a new license. The LFSSA was amended some years back, making it covering all the various banking and insurance licenses. So the credit token license is in an old license that has been used before, but innovatively, players and the authority have recognized that it can be used now for new financial products. The securities license, in securities license. So again, it is not new. If you want to deal in securities, that's the license that you go for. And then we have the payment systems approval under section 171. So if you run the payment systems, you get approval from authority to do a payment systems approval. And finally, Andrew Powell will speak more about this later, but we also have the approved exchange regulations in the LMSSA, where in addition to the Labuan Financial Exchange, authority allows you to set up an exchange for securities and digital assets using those provisions. Okay, next slide, please. I've set out here some basic guidelines on what are the requirements for doing, say, a money broking license. That's the one that's increased. It is quite popular now in Labuan, and we have quite a number of new registered money brokers using that license to run a digital financial service. And the proof exchange, if you set up in a proof exchange, like what GSX has done successfully, you will run your own rules of exchange in providing a foreign platform for securities and cryptocurrencies. Next slide, please. Okay, so the last point I wanted to make is the Malaysian environment and the Labuan environment both currently permit for the issue of tokens and the running of various types of financial services. Importantly, we need to note that we have anti-money laundering and counter-financing of terrorism rules that apply. In line and in tandem with all these regulations, Amla rules continue to be updated to cover this aspect. So we have Bank Negara has come up with the digital currencies Amla regulations, where reporting institutions would be those that carry on the following services: exchanging digital currency for money, exchanging money for digital currency, exchanging one digital currency for another digital currency. So important to note that Amla regulations will apply. In Labuan, right, Labuan entities that undertake IFS activities, particularly those in the exchange of digital currencies and anything else that is covered under innovative financial services, those will be considered reporting institutions as well and would have to comply with the Amla guidelines. Okay, so I hope that's a quick snapshot and give you some clarity in terms of the legal landscape we have now, what we call onshore Malaysia and midshore Labuan for the digital asset space. Thanks, Serene.
Okay, thank you, Wimin, for the very insightful sharing. So, okay, before we go on to Jonathan, so yeah, as what shared by Wimin, so in Labuan IBFC itself, currently we don't have any specific guidelines for digital players, and we really run on and operate within the existing legal framework as well as the regulations. So maybe we run another round of the poll questions. So do you think that it is a time now for us to further specify guidelines for digital market in Labuan IBFC to better maneuver its licensing opportunities? So what do you think, whether it's yes or no? Okay, thank you. So now we will then move on to Jonathan. So he's also the partner from ZICO. So we'll talk about, is there really a need to regulate it currently for the digital space?
Thanks, Serene. So thanks, Wimin, for laying down the available laws in both Malaysia and Labuan. So Wimin is our ZICO Insights and ZICO Trust Director. Looking at the current global landscape, we can see that most countries that embraces crypto activities has yet onboarded the idea of recognizing cryptocurrency as a legal tender, but largely has been regulating crypto exchanges in their respective jurisdiction. On that note, Malaysia equally, as earlier mentioned, set out frameworks, be it licensing regimes or regulatory restriction, which sets parameters on how crypto exchanges should function. Labuan has to date issued about 49 money broking licenses, of which, as explained, allows facilitation of perhaps, a lack of a better analogy, an OTC crypto exchange, with the exception of two players, one of which we have the pleasure of having on this panel today, GSX, represented by Andrew. So it is apparent that regulators have started framing requirements or operating procedures or standards on such exchange operators. But again, my question to everyone is there really a need to regulate? So my thoughts this afternoon to all is premised largely on the 12-month review revised FATF standards virtual assets report. Now, in June 2019, FATF finalized amendments to its global standards to clearly place anti-money laundering and counter-terrorism financing requirements on virtual assets and virtual assets service provider, VASP or VASP. The FATF agreed to establish a virtual asset contact group to promote implementation, identify issues, and engage with the private sector to monitor progress. The FATF also agreed to undertake a 12-month review to measure the implementation of the revised standards by jurisdictions and the private sector, as well as monitoring any changes in the typologies, risk, and market structure of the virtual asset sector. Now, who is this FATF at the end of the day? So FATF stands for the Financial Action Task Force. They are a global money laundering terrorist financing watchdog. It is also an intergovernmental body which sets international standards that aim to prevent these illegal activities and harm that may cause to society. So over the years, FATF has developed many recommendations and on various financing activities. And this time around, FATF has pursued the same with virtual assets. Now on my slide, you will see that one of the very first few recommendations where there was noticeable in the recommendation is that FATF wanted to perhaps streamline first the definition of crypto assets or the digital assets in that sense. And they came up with two main definitions, which is virtual assets is a digital representation of value that can be digitally traded, transferred, or can be used for payment or investment purposes. So this entirely differentiates itself from digital representations of fiat currencies, securities, or other financial assets that could possibly already fall within the purview of previous FATF recommendation. I know this will trigger many thoughts, especially how we then categorize stable coins at the end of the day, if stable coins may somehow rather premise on traditional financial products, and we'll try and explore that later. And the other streamline that FATF wanted to recommend was that let's have a uniform virtual asset service provider definition. And in this definition that they've proposed as a recommendation, it covers not just entities, but any natural or legal person that conducts business in the following activities. And the following activities will include exchanging virtual assets with fiat currencies, exchanging between one or two forms of virtual assets, your crypto to crypto, transfer of virtual assets, safekeeping and administration of virtual assets, and participation in and provision of financial services related to issuers' offer and or sale of virtual assets at the end of the day. So if you look into this entire definition, it will be broad enough to even capture individual traders in the context of Labuan when it comes to money broker licensees. Now, but that being said, and rolling back just 2 years, you will see that just 2 years, the G20 ministers of finance and central bank governors acknowledged that crypto assets are not a material risk to financial stability, but raise issues with respect to consumers and investor protection, market integrity, tax evasion, money laundering, and terrorist financing. Now, if you speed up just 1 year, come 2019, and reading through the FATF report, it seems to suggest that the main trends in virtual assets, money laundering, and terrorist financing risk landscape seems to lean towards VAS or virtual asset service providers who perhaps are operating in jurisdictions that are lack in effective AML or CFT regulation, and the use of multiple VASPs in a certain platform, which causes a lot of a high level of challenge and competency for authorities to try and follow the transaction trail, therefore buying more time for criminals to move criminal proceeds. And this the continued use of tools and methods that increase anonymity has caused transactions it has caused the effectiveness to control anti-money laundering and CFT a bit more challenging as it goes by. So of course, there's some examples that I put in my slide as to how these parties are using different proxies, different DNS registration, different tools to create a higher level of anonymity, and therefore promote the risk or the abuse of using VASP as AML as money laundering and terrorist financing means. Now, VASP with low AML and CFT governance were not the only deficiency that took the limelight. Peer-to-peer transaction and private non-custodial wallets without the use or involvement of VASP or financial institution are also not explicitly subject to AML and CFT obligations. Now, the lack of this explicit coverage of peer-to-peer transactions via private unhosted wallets was a source of concern for a number of jurisdictions. However, if we were to put further thoughts in this, and the issue is then whether VASPs should be able to transact with private wallets. And if so, what kind of AML or CFT requirements need to be put in place to mitigate such risk? It should also be noted that VASP's best practice and procedures to meet AML and CFT obligations could be different than those banks or other traditional financial institutions, given the nature of blockchain in itself. But nonetheless, jurisdiction noted that transfers to unregulated peer-to-peer sector could present a leak in tracing illicit flows of virtual assets. Now, so we have P2P and private non-custodial wallets being an issue. And then we also have low effective AML governance for VASPs being another issue where money laundering and terrorist financing is being facilitated at this point in time. And I'll try and touch a little bit on the so-called stable coins that was also raised in the report. See, the Financial Stability Board, the FSB, considered that the so-called stable coins are a type of crypto assets that aims to maintain a stable value relative to a specific asset or a pool basket of assets to other assets. So in simple terms, they are coins packed against a set of currency, a set of assets that provides a stable value to its to the coin. So depending on the design of the so-called stable coin, it may perhaps instead be classified as a traditional financial asset. It perhaps will fall within the purview of security in most jurisdictions, under which the revised FATF standards and national regulations somehow or rather feels that we are still within sufficient parameters to govern stable coins at this juncture. So on that alone, what FATF actually raised was the fact that this sector again is permeated with a lot of anonymity. And anonymity is a major potential for money laundering and terrorist financing risk. So many virtual assets have public or permissionless and decentralized ledgers. While transaction ledgers may be accessible to public, the ledgers may not include any customer's identification information. There may also not be any central administrator monitoring transactions as well. Other virtual assets are private or permissioned, with only a limited group of entities able to initiate transactions or view and verify the ledger. Some virtual assets known as privacy coins or anonymity enhanced coins have additional cryptographic software that can further obscure transaction. And there are tools available that can be used to increase anonymity of transactions itself, like tumblers and mixers and other forms of DNS that's available in the market. So depending on how they are set up, each so-called stablecoin arrangement will involve its own ecosystem of entities. While there are a lot of issues highlighted in the FATF recommendation in the 12 months update report, I've only highlighted a few above. But pausing here, I would like to reiterate my question. Is there really a need for regulation? And perhaps I would summarize and conclude my presentation with perhaps just this one recommendation from FATF. And in my perspective, I feel that this recommendation, if rolled out with care, could be the main overarching or perhaps the foundation of regulation to come that may not seem to be too intrusive when it comes to upholding the ideology of a blockchain and the ideology of a transparent, decentralized system. And that would be the implementation of a travel rule. Now, it will be perhaps putting a parameter between every single VASP and integrating a list where verifications can be taken into account. It may not require strict governance, but it allows parties, especially when they're transacting between one party to the other, to perhaps have sufficient due diligence, perhaps to create sufficient paper trail as to where each currency has been originated from. So one way to address this issue is that, which was also raised by the private sector over the report, was that why not create a global list of VASP? Now, in this approach, information on licensed and registered VASP will be collected from each jurisdiction, listed, accessed through a central database, and accessed through APIs or smart contracts, which can connect jurisdiction to jurisdiction. But the same will also sprout the need for a uniform digital identity, which has, again, permeated a lot of issues in this entire space. Now, creation of a global list of VASP raises a number of challenges as well, including how can we actually ensure the accuracy and security of information? Who is the one that's responsible for collecting and maintaining the information? Who would then supervise these bodies? And perhaps who would have access to this information in light of potential de-risking risks relating to the publication of lists of VASPs? Now, all this would need to be addressed before a robust solution could be developed. Further, there may be other options available to assist VASPs in identifying their counterparties. So coming back, is there really a need to regulate? Well, to us, the obvious answer is yes, considering how the ecosystem is being abused by money laundering and terrorist financing activities. But the question I would ask further is that, is it time to regulate? I would think that I will always believe that there is no better time than yesterday, which shapes today. But the challenge remains as to how far and how wide should these regulations be, as oftentimes innovation and market development are impaired by over-regulation. And for innovation to continue to thrive, we always propagate the idea that innovation should always be ahead of regulation to some extent. With that, I shall open up for questions. Thank you.
Hi, thank you for Jonathan. Really interesting sharing. Okay, before we move on to the next session, so it's really poll questions relating to what Jonathan has been shared earlier. So whether is it a time now to be regulated? So the poll questions here we have it. We will have, will developments in financial services be eventually determined by technology? If so, do you think TechFint will then replace FinTech? Yes or no? So before we go into, before we look at the poll result, so let me introduce, we have two more speakers that join us for the panelist sessions. So we have Andrew with us. Andrew is the CEO to GSX Asia. So he is with our latest digital securities exchange licensee in Labuan. So before this, we have two digital exchange. So one is LFX owned by Bursa, and the other one is Fusang, and GSX is the third exchange in Labuan. So the other one, we have Ridzuan, Mr. Ridzuan with us. So Mr. Ridzuan is the chairman of Fintech Associations of Malaysia, and he is also the International Advisory Panel of Labuan FSA, the regulator to the jurisdictions. And yeah, and he is also the head of Asian, where remits the digital remittance providers. And together in the panel, we also have Wimin as well as Jonathan with us. So before we start off the panelist session, let us have a look at the poll result, please. Thank you. Okay, let us have a look at the first one. So we have the question, do you think the digital community needs regulatory recognition? Yeah, so from the participant, we can see 99% actually say a yes. If we look at the second questions, do you think it is a time now for us to specify really dedicated guidelines for our digital market in Labuan? Yes, still the same, 94% responded yes. And the third one, okay, so will the developments in financial services will eventually be determined by technology? So it's still a yes. So maybe I can, based on the result, maybe I can get the some comments or feedback from our gentleman there and yeah, and women. Any thoughts of the poll result? Maybe we can start with Andrew.
Yes, good afternoon, Selamat Petang. Yeah, I think it's very encouraging that that the polls are suggesting we needed to have a regulated environment. So a shout out to my colleague Geeta Castle down there in Singapore. I think we're going to be very, very busy over the next few months as we meet our conditions from the Labuan FSA. But look, we come from, the GSX group comes from a very regulated jurisdiction in Europe, even during the transition post-Brexit to the UK FCA. Look, regulation is at our core. And also regarding AML KYC. So we currently fulfill the most stringent regulatory framework, I would suggest. So we do welcome regulation, but maybe later on I'll touch on why we chose Labuan. But yes, you know, it is encouraging that people are taking this new industry seriously. Thank you.
Yeah, thank you. So maybe we can ask the opinion for Ridzuan, please.
Thank you. Afternoon, everybody. You guys know that I can say Selamat Petang because that's my mother tongue, no issue. It is, in my opinion, expected that the first and the second, the result of the first and the second poll questions are skewed towards favoring having regulators and having specific guideline. But I just want to give a different perspective on the result of number 3. 66% is saying that it will be driven by the TechFin. I think at the initial stage, yes, it will be driven by the technology companies. But as the company mature, we've seen the result of companies that is driven by technology and stay focus on putting technology first may not be the best outcome over a longer period of time. If you look at companies like, say, Wirecard, for example, the reason why they are not doing well now is not because of the technology doesn't work. What doesn't work is the mindset and the culture of looking inwards and embracing the value that regulation and compliance and governance as part of the key driver to the business and sustaining the value of the company. And this is where I see we can't generalize companies from, say, the US, because the US is a unique market on its own. As you can see in US, they could actually negotiate their way out if, let's say, even they were charged or even proven to be in breach of certain regulation, even in criminal in nature. As you can see, Goldman Sachs actually is paying their way out for the Malaysian government. But generally throughout the world, that's not the case. If you breach criminal regulation, you most likely will be punished not just by monetary settlement, but there are other ways. So that's why I just want to bring that different perspective and spectrum in terms of not necessarily that would be a good thing, but at a starting point, I think, yes, technology will drive the development. But throughout the maturity of certain companies, I think that needs to be relooked in terms of making sure that business model and value for customer become more of the priority rather than just technology. I'll stop there. we'll discuss further.
Thank you, Ridzuan. I absolutely agree with you because there are also market players actually come to us initially, like what you said, they are not really regulated in a way. So because they are running the technology, they are the tech guy, all that. But over time, when the market mature, they're really looking at a jurisdiction to be regulated because ultimately the core functions or the core business activities they are carried out is really financial services. So the underlying is just the technology that run the financial business. Okay, so earlier we heard from Jonathan. I think he really agreed. Like there is a time where we have to look. I mean, these areas will really have to be regulated. So, Jonathan, if there is anything else that you wanted to add on this?
Okay, thanks, Serene. I would try and take a different approach from Ridzuan. Actually, both Ridzuan and I, we were both on sitting on FAOM together, and Ridzuan's my president in FAOM in a sense. To a large extent, I would say that TechFin would be really emerging in a sense whereby if we look at risk appetite and risk credit rating today, how it should be translated, or rather, let's take a more relatable model, e-wallets today, and how e-wallets are taking over as an alternative payment instrument compared to credit cards, right? It's because of reward points and interchangeable reward points at the end of the day, and instantaneous of understanding lifestyle. And that would actually translate to the fact that data becomes the key to translating or reassessing credit rating in the long run. So no longer I go to the bank and I must mortgage my firstborn in order for me to get my loan, but it could be very much premised on the grounds of my business model, because my business model could actually cater very much to the relevancy of lifestyle today. So, but who would usually get these data first? It would largely be technology-based companies. I completely agree with Ridzuan in a sense whereby these boys will start emerging, and perhaps creation of financial products based on these data would eventually come in by them onboarding the traditional financial product boys at the end of the day. But to look at it and perhaps based on yesterday's article, and blockchain has now renamed themselves as N-Chain, and it's getting very exciting how they would try and integrate many more blockchains into one central system and govern it in China itself. So to an extent, I think TechFin is going to be quite a large determinant in time to come.
Yeah. Okay. Thank you, Jonathan. So yeah, we move on. Yeah, Wei Min, what do you think about this on the poll result?
I just have a quick comment on the first two answers, which is very encouraging. I think for all of us who are advising clients on this sector, it took a couple of years for authorities to kind of stabilize their position. And what we need out there for business to move quickly is really certainty of rules and regulations. Very often, right? So SC is moving and consultation papers are coming out for digital asset e-wallets. Labuan has exposure. I mean, you talked about the second question was, the second poll result is very encouraging because I think there's a big shout out to authority to move ahead with the exposure draft that they've already gotten in place for all kinds of digital products. I think that will really give a push to the industry there. Yeah.
Okay. Thank you, Wei Min. Okay. Andrew, again, I'll go on to you. Really, congratulations on the GSX Labuan's license. So earlier you talked about your comments on the poll result. We wanted to understand, why does an EU-based digital exchange like you pivot to Asia actually, and why do you choose Labuan IBFC as your Asian base?
So thank you, Serene. I noticed that there's probably not much time left, so I'll try to be pretty brief if I may. Yeah, look, sure. Look, the GSX group identified a key opportunity to be in Asia, embracing financial inclusion. There's 600 million people here in ASEAN, so it basically makes sense to provide a venue for investing in regulated investments. So we just talked about how we're very pleased to see the emphasis on regulation. So we want to issue digital securities, shares, bonds, and funds, but utilizing the best in technology. So probably in that third point, I would say that we are more financial guys who use the best in technology. So that's where we currently do stand. So commercially, it makes sense for us to be here in Asia. A critical point is that this region needs to be self-dependent. I don't think we can keep relying on looking at the geopolitics, currently. We can't rely on the United States or Europe or even China with their One Belt, One Road, or Japan, the Asia Development Bank, to sort of fund the 600 million people in this region. So we have to work as a community, I think. So potentially we can call it a digital kampong, to have that Malay sort of aspect to it, where we collectively raise capital and provide funding. But this needs to be regulated. We need to look after not only the issuer, but also the investor. But the big thing here is that this is going to be a necessity. How long, for example, can Singapore keep spending $6 billion per month, or Australia $11 billion per month from the government's wallet? So basically the kampong, the community, needs to step up to the plate and look after itself. And why Labuan? Look, in Asia, there's multiple jurisdictions, all very dynamic, but we performed a jurisdictional analysis, and Labuan stood out to be a forward-thinking, innovative, responsive and accessible jurisdiction. Obviously yourself, Serene, Farah, very dynamic people, very accommodating. And of course, look, Labuan is, its proximity to the two regional dynamos of Malaysia and Singapore is a significant factor. Our friends from China, for example, the big four Chinese banks are in Labuan. It's becoming a very international hub, an evolving hub for banking, insurance. So all these factors drove us to Labuan. Back to you.
Thank you. So you talk about financial inclusion. So what are the GSX plan for your Asian exchange actually? Any specific markets that you wanted to explore, or is there any reason that, how you can actually, GSX can perform this better than the legacy exchanges?
Well, look, on the technology side, we want to have a measured approach. So we're not going to bite off too much we can chew. And as we've seen from the polls, regulation is paramount. So basically our phase one, that's going to list GSX Stacks native securities. So Stacks is our distributed ledger technology, securities trading and asset clearing and settlement system. This has been basically de facto approved by the Singapore MAS in the project Ubin Phase 5 series, which was highlighted at last year's Singapore Fintech Festival. So stage one, probably Q4 this year, we will do what's known as a security token. So we will issue digital securities, be they shares, bonds or funds, on our own blockchain called Stacks. Phase two, we will do what's known as a wrapped security. So we can use other protocols. So we can again do shares, bonds, bankable assets, say in Q1 next year, so-called tokenized securities, as opposed to security tokens. And we will utilize smart contracts to deploy key, I think, what Farah has sort of suggested that we need to do. We need to look at ESG, environmental, social, good governance, financial inclusion, and how that even interpolates with a concept of makasi, the Islamic finance makasi compliance. So basically, let's do good for the world. Because right now, ESG investing is basically defensive. You go underweight, or you don't invest in a mining stock, or you don't invest in a gambling stock. But let's be positive and use this new technology to issue not only Sharia compliant, but just generally ESG compliant assets. So that's our overall thesis.
Thank you, Andrew, for sharing. Okay, maybe we can hear from Ridzuan. So we talked about financial inclusion earlier, and really Asia is the place where the rich and the poor, the disparity is really huge. So maybe I wanted to ask Ridzuan, how can actually then onshore Malaysia and midshore Labuan works together to actually better highlight Malaysia digital offering holistically? So do you think there is a natural synergy where we can, how to leverage on one to the other to benefit the nation as a whole?
Yeah, thank you. That's a very good question, and I'm very encouraged to see that a lot of industry players and also stakeholders are looking for guidance. So guidance could be in the form of how fintech association like us provide the early understanding and awareness about what's going on. And just to, I'm sure a lot of us know that there's already a fintech association based in Labuan that highlights certain development and progress that's happening in Labuan. And they are actually working very closely with us with the Fintech Association of Malaysia. And this is where I think one of the suggestions that we've made and has been taken up quite seriously by many stakeholders is for us, the association, to create a playbook that will give either existing players or inbound interest or any pass-through interest, what are the facilitation that they would get either from the regulators or from the existing players or even service provider like ZICO, so that they would know where to start and what needs to be done in terms of preparing themselves, entering into this arena, and they can really craft a very useful and innovative business model that would leverage and take advantages positively of Malaysia and Midshore Labuan for them to start, for them to grow, for them to scale, and also looking at least on finding talents, funding, and how they want to maneuver their regulatory concerns. So that's, I think, one of the ways where, at least directly for us, Fintech Association could help. And this is where we can work with law firms like ZICO, players like GSX, as well as with the regulators in terms of putting together a holistic platform to help at every stage for players that I mentioned just now, whether they are coming, they're establishing, or they are going outbound, so that they can really look at Malaysia as a very useful platform, whether from Malaysia onshore or from Labuan midshore. I think that sums it up in terms of how we plan to use those collaboration. Yeah.
Okay. So really,
can I just also add, sorry, just quickly on the tech fin versus fintech. So yes, look, first, I think there's a huge funding requirement for the region, right? So the region needs to, it's been estimated, generate at $1 trillion per year in infrastructure. If you think about the capital being moved from, say, Jakarta to the island of Borneo, just south of Labuan, all the infrastructure which needs to be done. But look, there is definitely the technological aspect. So, of course, as an exchange, as a digital exchange, I think it's a reasonable and achievable aspiration of ours to sort of move from a costly and risk-based T+2. So when you buy and sell shares, it basically takes 2 days to settle. We can actually move now to a T0, a top-day settlement paradigm. So we can reduce risk. So we can remove points of friction, remove trade and settlement fails, and have a high level of trust, the so-called immutability of the blockchain. So yes, look, but I think first, in our view, is let's just solve for the funding deficit in the region. Thank you.
Thank you, Andrew. And really, so this one will then segue nicely to the next question that I would like to ask Ridzuan. Labuan being the wholesale intermediation center, of course, we are agnostic jurisdiction, like we have currency, tax, legal, neutral. So do you think Labuan IBFC would be a natural platform for cross-border money transfer digital entities? So whether we are really a natural agnostic jurisdiction for a function like this?
Yeah, definitely. I mean, speaking selfishly, I definitely are looking very, very paying very close attention to digital asset being used as a medium of exchange, as the engine between one currency to another in terms of facilitating remittance business, for example. Because now, if you look at the infrastructure that is facilitating remittance from onshore to other places, we still have to use, for example, the SWIFT rail and platform. And this will involve minimal about 4 banks, and you have to, let's say, for example, exchange from ringgit to US dollar to, say, rupiah, while Malaysia and Indonesia is actually sitting next to each other. But because the infrastructure is as such, that inevitably add additional costs. And then when we started looking at digital asset, as well as DLT and blockchain as the core technology or enabling technology, we found out that there is a huge potential for remittance businesses like us to be able to use that alternative infrastructure while able to maintain the efficiency and the effectiveness, as well as the security side, and not actually compromising in terms of integrity. And on top of that, making us far more efficient compared to the current way of doing stuff. So this is, I think, what I want to encourage other remittance companies to look at, because that's really something that has been done, for example, by a company like Ripple, for example, and we need a company like that to be stationed and based in this part of the world, and hopefully in Labuan, so that that advantage can be further shared and further be used by many others, and not just remittance companies.
So thank you, Ridzuan. So really, maybe I wanted to ask women's, yeah. So looking from what we discussed earlier, so we talk about the regulations, we talk about the agnostic of the jurisdiction, yeah. So where do you see digital in Malaysia as a whole, like 5 years from now, both maybe onshore Malaysia as well as Labuan IBFC?
Yeah, I think, and I think Jonathan, you agree with me as well. I think we're going to see more clarity, more rules coming out from the SC, Bank Negara, and definitely from FSA. I mean, as we speak, we're already considering the new financial services licensing regime that FSA may be considering. So, yeah, I think to me, I think that is definitely going to happen.
Yeah, so there's even we talk about the how onshore Malaysia and Labuan IBFC could be benefit on each other or that kind of thing. So maybe it's like, as comparing to onshore Malaysia, what is the key benefits of incorporating a digital entity in Labuan? Yeah.
Okay, I think the question may be not to be phrased that way, because both are different. And as Ridzuan was saying just now, it's really about the business plan and the company that is doing this, which stage of their business they are starting to come in. So it's not so much a question of whether, do I choose Labuan or do I choose Malaysia, but more about really understanding their business model and seeing what's currently possible to do now, and then working from there. So Ridzuan, I like the idea of the playbook. I think that's really something we can work on to give investors out there clarity, really, and choices, right? Yeah.
Okay, so thank you, Wimin. So maybe I move on to Jonathan. Yeah, looking all these, yeah, maybe we look at the challenges. So if we look at currently when we talk about is a merging of a legacy and digital. So is the challenges then is really like based on either is a system challenges or is a mindset or philosophy challenges. So do you think regulator, when they have this legacy model of financial services, will then ever they truly understand the need of enhanced flexibility and non-geographic tendencies of digital players? So it's not so geographical boundary kind of regulations, or they could be really like global and is flexible enough for these digital players.
Yeah, thanks, Serene. I think we will take the perspective that market forces are always determined by supply and demand. And when there's larger amount of demand that requires a push to whether you're a traditionalist or non-traditionalist regulator to start looking into how the market has grown and how it would actually disrupt the financial stability of the global market per se. But perhaps to your question, when we look at whether the traditionalist financial institution or traditionalist financial regulators would be able to embrace this non-geographical philosophy, I think to a very large extent, it would very much be like introduction of the World Wide Web in the past, where we have the internet, right? Who is to regulate the internet today? The question remains no one. But it continues to allow different governance and different jurisdiction to perhaps create a parameter that allows a set of guidelines or governance that somehow manages a fair play amongst players. And that in itself, I will again fall back to the article that was writing about Ali Chain and Chain, in the sense whereby perhaps is no longer a location or geographical jurisdiction governance, but perhaps it will be entity to entity, where the blockchain itself is being governed by which entity and what kind of parameters of governance you will be looking into in that sense. And if in the article itself, I was also quite amazed to hear that Ant has signed a deal with the Land Department of Zhuhai, and now they're looking at in throwing out opportunities or blockchain-powered solutions to connect government banks and end users and title deeds. So it is not so much on the geographical jurisdiction anymore, but rather who and how large these infrastructures are, and what should be a global parameter that should be set so that these parties will be able to run a fair play in that sense.
Okay.
Could I just quickly add there? I think after the financial crisis, we did see a move to more what I would call descriptive regulation. I mean, the initial knee-jerk reaction, in my humble opinion, was prescriptive regulation, as exemplified by Dodd-Frank and the Volcker rule, and that had a lot of extraterritorial impact on this part of the world. It basically seized up a lot of the emerging markets. I would suggest a more appropriate approach for this region, for this huge initiative that we have to undertake here to raise capital, but also protect the investor is something like the FX Global Code of Conduct, or more, as you're alluding to, a more of a global approach using best practices, IOSCO principles. So what I would call a descriptive principles-based approach with guidelines. So not draconian, in my humble opinion, like Dodd-Frank, because we've just seen the last vestiges of the Dodd-Frank regulations, some of them being unwound just this week. This is 9 years later. So yes, I think we need to have more of a consensual framework, not just one jurisdiction telling us what to do over here.
Yes.
Yeah, we agree on that.
Absolutely. So do you think the new travel rule will then actually curtail the development and acceptability of these digital financial services that we have on the FATF travel rules that you shared earlier, Jonathan?
I think the idea of the travel rule is actually something that everybody should take a serious look into, to the extent that it actually, in any market, any emerging market, there will always be, whenever it rises without a set of regulation, it will always be abused. And the fact that and if we introduce regulation to a certain extent that promotes some kind of transparency, promotes some kind of trust, I would take the position whereby investors today would rather have a better confidence in relying on a semi-governed or prescriptive governed product than one which is not, that is left to a perfect market to determine its value at the end of the day. So so back to the question as to whether would the travel rule eventually, I guess, impair the onboarding of the industry or impair the digital growth in terms of cryptocurrency per se. I would say that it's a matter of how far we will be implementing this travel rule as well. And as what Andrew clearly pointed out, if it's a prescriptive approach, it is just merely a means where it would still allow VAS players, virtual assets service providers, just to communicate among each other, to have some form of check and balance. Then I think it provides me, even as a layman in a personal point of view, to perhaps trust in the investment that I'm going to participate in at the end of the day, than one that perhaps at this juncture everyone is so much. I think in 2017 everyone was so much clouded with ICOs that spurs out in countries that that perhaps some of us have never heard of before, and thereafter, after a fundraise, the next thing you hear is that the company just winds up and then run away with your money. So I think the travel rule would be something, if cautiously implemented, would promote.
So I have one question here. The Securities Industry Central Depositories Act 1991 of Malaysia provides a legal framework for central depositories and regulates the Bursa Malaysia Depository Central Berhad. So for example, does this framework also exist in Labuan? Or is it applicable to Labuan entities as well? Yeah.
Let me take that.
Okay.
Yeah. So the Labuan Financial Services and Securities Act sets out the provisions for you to establish an exchange. So the first one that we had was the Labuan Financial Exchange, LFX. So when LFX was established years ago, they came up with the LFX rules, which sets out their way of depository and trading and all that. So the quick answer is that the Securities Commission Central Depository rules don't apply to things which are listed on LFX. right? So if you set up your own exchange under the LFSSA in Labuan, you basically come up with your own exchange rules, which is something that GSX Andrew will have to sort out soon. Yeah.
And we're looking forward to that. Thank you.
Okay, we have second question here. Thank you, Wimin. So the second question, are crypto assets considered to be property as a property under Malaysian law like in UK? Yeah, if any one of you would like to take this.
Okay, I'll attempt that. I think that falls back on what Wimin was sharing earlier in terms of how we recognize digital assets at the end of the day. So the terminology adopted in Malaysia, we use the term digital assets and how it's being structured. By far, we have not structured digital assets to be recognized as a property, and therefore you would see that but whether you're trading a digital asset today, whether it generate real property gains tax or not, that part of the law has not been established at this juncture. Digital assets largely is recognized as a whole in general, is recognized more of a security simply in Malaysia, simply because it is able to be traded on a secondary market like what we have here in Malaysia. We have Luno, we have Signergy, we have Tokenized as our digital exchange operators, and likewise in Labuan now we have GSX, we have Fusang, who allows us to trade these digital assets, and because of that tradability, it captures a inherent feature of a security, and by far that's where we are taking the position for now.
Yeah. I'll just add to that a bit more. It's also to do with what area of law you're looking at, right? So property is defined in all sorts of, in various ways in Malaysia, right? So we have land laws here, we have things to do with private wealth. One issue that the private wealth industry, the trust experts and the trustees are looking at is how do we look at cryptocurrencies as assets? Because in real terms, they are assets. So it's not a simple question in the sense that there's an overall general definition as to whether it is assets or it's not assets. One clarity that we have now is because of the Securities Commission prescription order in 2019, if you are a security, then it's very clear you are a security and you have got that security feature of asset. The question then is for things which don't fall within that definition of security, to me, they are still assets because there's a value to them. From the private wealth perspective, I think we'll treat them as assets, but then you have to see what law are we looking at, which context are you looking at to consider whether they're assets or not assets.
Okay, so thank you, Wimin. Thank you, and thank you for joining us. Have a nice day.